Hello again, everybody. It is August 20th, 2024, and this is Trading Market Cycles, and I am Richard Smith, Executive Chairman of the Foundation for the Study of Cycles. So great to have you here. This continues to be a lot of free content that we're providing on YouTube, and if you're appreciating it, if you're getting value from it, please consider becoming a member of our not-for-profit Foundation for the Study of Cycles. And if you're really inspired or if you're making money off the trades I'm giving you, consider making a donation. So great to have you all. Thank you for joining us. And let's get into trading market cycles. And I want to begin by looking at what we did last week and what has happened. And then after I do that, we're going to look at gold, which we didn't have a chance to really dig into last week. Gold's making all-time highs. It's in the news. People are talking about it. It's time to take a look at gold. So we'll take a look at gold. And of course, everything is connected in the markets. So gold is connected to what's going on with the yen and the dollar and equities, et cetera. So it'll all tie together and we will get the big picture over the course of the next 45 minutes. But first, let's dive into what happened since we met last week. Going to just make a couple adjustments on my screen here. Bear with me. Come on. All right, here we go. Let's try, yeah, that should work. All right. So I've set up all these charts to show what we were looking at this time last week. So this was noon Eastern time on August the 13th, 1 week ago. And we looked at a few different assets to put together into a portfolio of trades based on 2-hour data, which generally gives us about 1 to 2 week trades, sometimes 3-week trades. We're trading shorter term cycles, intraday cycles. So that's been the focus. 1, because that's what I do. And 2, because it helps us to learn how to use cycles, right? And get more iterations of the cycles on shorter time frames. And most, there hasn't been a lot of work on intraday cycles, but that's something I've been working on. So here was the forecast that we looked at, the cycle that we looked at on the E-mini S&P 500, the 2-hour cycles. And right last Tuesday at noon, we were here, okay? I found this, an uncomfortable situation because the week before, right, we had the big drop. August, this was, that yen carry trade deleveraging event that was on the 4th and the 5th. So we're still down here. We had all this volatility. We're going. Is this really the beginning of another week of bullishness in stocks? And the cycle said yes, and indeed, that has panned out. So we have continued higher over the past week. Even took out the highs from before the little mini crisis, and we're nearing the top of this cycle. We can look at current data a little bit later today. But I just wanted to show you what each of the trades that we looked at last week are doing so far. So, good trade here on the E-mini. The next one we looked at was the NASDAQ, very similar to the E-mini S&P, and also the cycle indicating bullishness, and that's what we got. The next trade we looked at, I think, was Bitcoin. So let me find, where is Bitcoin in here? Here it is. Okay. Let me just drag this over here so it's in the right order. All right, so here was Bitcoin last week at noon on the 13th. And I said, we've been following this very prominent 115 period cycle on Bitcoin. I call it the weekly cycle because literally there are 115 hours in the week in the futures markets, 23 hours a day, 5 days a week, 115. Yep. And I said we were entering into down week in Bitcoin. And indeed, it has not been an up week for Bitcoin, right? So we've gotten some chop in Bitcoin. Hasn't really gone up, hasn't really gone down. This is just normal, vanilla volatility for Bitcoin. So did go down for a little bit, popped back up, going back down at the moment, but on the whole, right about where we started. So we didn't get profit from the down week, but we also didn't have it go against us. So that was Bitcoin. After we looked at equities and Bitcoin and put together a two trade portfolio, we looked at our correlation studies, which I'll get to that again in just a minute. And we found that Treasury bonds were the best. It's updated without me asking it to update. Happens sometimes, but let's get back here. All right, so Treasury bonds on August 13th at noon, we're about here, okay? Pretty sure this is the cycle we were tracking. We said, yep, let's try long Treasury bonds, okay? Haven't lost money, haven't made a lot of money going up at the moment. I think we can zoom in here a little bit. And on the whole, headed in the right direction. Cycle still pointing up. Next trade we looked at was natural gas. I did not do an intraday cycle on natural gas. I said I'm in a longer term position on natural gas, but I want to be long in a little natural gas. And, so far so good there. And the last trade we looked at was the yen. And these are the yen futures, not the USD JPY. So when this goes up, it means the yen is strengthening. And that's what we've had so far. By the way, again, here was the panic moment back here on the 4th, right there, and the 5th, right? So we have seen strength in the yen over the past week. And to sum up, to remind us now, we had put these positions into a portfolio. Okay, we were long one E-mini S&P. We were long two Treasury bond futures contracts. We were short one Bitcoin because a full contract is 5 Bitcoins. So 0.2, you can use the micro Bitcoins, is equivalent to 1 Bitcoin. We were long to natural gas, and we were long to yen. And again, some things worked great, right? Equities went up. Bitcoin did not go up, didn't really go down that much. It's down a little bit at the moment. Bonds went up, gas went up, the yen went up. So, wow, 4 out of 5, with the 5th one being really minimal deviation. So I'll take it. And then I just want to show you now. This is that portfolio that we were looking at last week. Still has 65% diversification, exposure of about $10,000, meaning, if kind of a worst case scenario, things fell apart, went against me 10 periods in a row, be down about $10,000. All right, so I want to go down here now and look at a couple of things with you. First of all, sorry for all the the detail here, but I just want to show you. Here's where we were on August 13th in this portfolio right here. And over the past week, this portfolio has gone from 80,000, well, 805,000. Okay, that's futures, keep in mind. You have margin on futures, but the total value of the portfolio, 805,000, gone up to 820,000. So that was a $15,000 gain in that portfolio in the futures markets over the past week. And, you know, this is the weekends here, so forget about that. But look at how steady that was without a lot of volatility, right? So from here, I mean, that is a beautiful, beautiful performance put together using cycles, supported by trends, and then building a diversified portfolio of uncorrelated bets. So doesn't always work out that well, but it often does. And I'm glad to be able to show you how it's supposed to work and how well it works when it does work. So excited about that. And let's look at a couple other things here. This is just showing the relative risks of each of the positions in the portfolio. So you can see they're pretty balanced, right? They all come down to around 10. Don't have to get into what that means, but overall, these positions have equal risk. It's called risk parity in the hedge fund world. And that's important. What else is important here? You know, here was the diversification, okay? On the 13th, I think that's about here. You know, we were at 60, 62%. It's chopped around, but it's still trending up slightly. So the diversification of this portfolio is getting even better, about 65% now. And if we look at the risk exposure here, okay, back on the 13th, it was around $12,000. So it's actually gone down some. Volatility's gone down. So over the course of the week, the risk exposure on that has gone down. All right, so that's it. Still working on RiskSmith over here. Not quite there yet. I'm hoping maybe by next week to be able to invite you to do some of this yourself. So bear with me for another week or two. Getting close, but this is the basic idea of how we put together these holy grail portfolios, diversified portfolios of uncorrelated bets using trends and cycles. All right. Let's just see. You guys got any questions here on that? Nope. Did you set up that Jupyter notebook yourself? Or did you get the template from somewhere? I set it up myself. I've been working on it for well over a year now, probably 2 years. So yeah, I have a colleague who helped me with this stuff. All right, let's talk about gold. Gonna jump over here first. Look at the big picture. Maybe we'll look at integrating gold into a new portfolio. So this is Jake Bernstein's daily sentiment index on gold. This is the small trader sentiment. And we can see that the small trader is getting very bullish on gold, is up into the red zone, which is usually a contrarian indicator. Red means sell. And yep, so small traders are very bullish on gold. Gold has been in the news. Gold is making all-time highs. You know, we're talking about the Federal Reserve cutting rates now. Everybody's pretty convinced that's going to happen. Rates going down are good for gold. That's the narrative. And we're up in a very bullish reading for small traders, which unfortunately, most small traders end up being proven wrong. And so this is a bearish indicator for gold and where it's at today. On the other hand, the commercial traders in gold, the smart money, the ones who are actually producing and consuming the gold, their bullishness peaked in 22, and it's been in a downtrend ever since. It's about as low as it's been back for the past 5 years. Okay, so the producers of gold are happily selling gold at $2,500 an ounce against their future production. So they're happily taking $2,500 an ounce for their gold. I'd call that a bit bearish for gold. This is the seasonality on gold. We can see which months produce the strongest returns. I think this is about 20 years of history here. And we can see that August here is one of the most bullish months for gold. We're nearing the end of August, okay? So it's been a good month for gold. But then when we get down here to September and October, okay, we see not so bullish in September and October. So we're going into a seasonally weak couple of months for gold. Another thing to keep in mind. Little different, little more nuanced picture on gold seasonality here. Also from Jake Bernstein's Seasonal Trader. Thank you, Jake. This is showing week by week, especially from about now, the 3rd week of August down into the 2nd week of September. A couple of bullish weeks, the end of September into October, and then down into November. If you want to get, that nuanced, there it is, particularly from where we are about now into the first couple of weeks of September. So on the whole, I'd say without even getting into the cycles, we've got excessively bullish small trader sentiment. We've got the commercials happily selling their future gold production at $2,500 an ounce. And we've got a couple of the weakest months coming up, and that weakness starts about right now. Not saying going out and sell all your gold, okay? But that is the picture. All right. Let's jump over now and see what the cycles say. All right. So here we are looking at the weekly cycles in gold. This goes back to 2000, September 11th. Interesting. I guess that was 2001. And we've got how many points here? About 1,274 weeks of data. Pretty clear cycle jumping out on the spectrum here at 235 weeks. So what is that? About 4+ years, a little more than 4 years. So top to top, this is February 25 back to February of 21. So it's about a 4-year cycle in gold. And we've got more room to run here in gold on a weekly chart. Okay, so I'm not calling for a top in gold. We can zoom in here a little bit. I think I can get this to work. Oops. Nope. Ah, there we go. Okay. So we can see that the cyclic RSI here, okay, let me try this. Whoops. Sorry about that, everybody. I'll learn to use these tools as we get further into our work together. I'm going to turn on this little cursor piece now. Okay. Zoom in here. Sorry. Bear with me. Let me get that off the screen. Come back down here. Let's try again. There we go. And I think I can even zoom in some more and show us that momentum is still going up, okay, on the weekly chart. We've got a little positive or negative momentum divergence here, but momentum is still going up on the weekly chart. It's still above the bands. You know, this is not a sell signal on the weekly chart whatsoever. All right, so that's the big picture in gold. Now let's look at some daily data here in gold. Again, these are the gold futures, so we're going back about 1,000 bars, 1,050 bars. We could probably tune this a little more, but on the whole, we're seeing this 85-day cycle in gold. It's in the spectrum right here. Stands out, as Lars would say, you don't want to sit on the top of that, right? That's how you know a good cycle in a spectrum is you don't want to sit on top of it. So the Bartels are a little weak, but still, this is the 85-day cycle. I see this in a lot of assets. That's another thing that for me, you know, I like cycles that are appearing in a lot of different assets. To me, that says they're more real. So around that, you know, 85-day range from 80 to 90, let's say, I see a lot of cycles in different assets. And we see it in gold. And you can just visually see, you know, it's worked pretty well, right? And right now, we are at the top of that cycle. Momentum is still going up. Okay, let's try to zoom in here a little bit. On the momentum, we can see momentum's pointing up. We're inside the cyclic RSI bands, but we are at a cycle top in a daily cycle top in gold. And if we go out and look at when this cycle is likely to bottom in September, maybe end of September. Okay, we can go back to the seasonal picture here on gold from end of August into at least middle of September. Down has been the average performance. Okay, so the daily is not giving us a lot of encouragement on gold. Now, let's take a look at the 2-hour cycles in gold. So this is 120-minute data. Going back about 850 bars. We got a very clear cycle on the spectrum, 125 periods. That's a little over a week also, right, in the futures markets. So it's about a week and a day from bottom to top and top to bottom, okay, because this is 2-hour bars. And it's, you know, been working pretty well. A little stretched on the upside now. And if we go down here and look at the momentum on the 2-hour data, you can see that it's up, but also has that negative momentum divergence. So I wouldn't say that we really have a sell signal here, but boy, it's getting nervy to the upside right now. That's what I would say. It's not a sell signal, but it's getting nervy to the upside. We could go and look at even a lower term time frame, like 15 minutes, as long as we're here. Again, it's about 1,000 bars. It's about what I try to do on average, 1,024 here. Got some nice cycles here, 137. Looks pretty good. And if we look at the 15-minute time frame, things start to look a little more encouraging to the downside. So the 2-hour sell signal is not quite there yet. Maybe it'll be there soon. But on the 15-minute, we've already got a sell signal and a nice cycle that's giving us a bottom into tomorrow. Okay. So these are only 15-minute bars. So could be a way to jump the gun on the 2-hour. Something to keep in mind. All right. So that's what I'm seeing on gold. Let me just come back here for a minute. I think there's still more room to run in the gold bull market. I think we're getting toppy right now. I think that the daily is looking shaky. The 2-hour is looking really shaky. And if we take it down a step further to the 15-minute, we've got a sell signal. So I'd be interested in shorting gold here, at least for the next week or so. Maybe wait for the 2-hour to give me an official signal, or if I wanted to try to jump the gun a little bit, get ahead of the tape, I'd be looking at this 15-minute with a stop, right above here at the recent highs. So I think that's a good, potentially low risk trade. So let me stop there now. See if you've got any questions. And then we can spend the last little bit of our time together looking at other markets if you're so inclined. All right. Wow. Lots of conversation going on. That's awesome. Great to see so much engagement. Gold cycle is down and metals can sink in deflation. Yep. And I would also note, I still think that we're in an over leveraged situation. And I think that what we saw with the yen a couple of weeks ago, even though everybody's calling it a head fake now, right? Oh, nothing to worry about. That was just some kind of little glitch that we don't fully understand. And blue skies from here on out, right? I'm skeptical. I think we're in an over levered economy, an over levered world. And I think that little yen carry trade unwind was a little, we could call it almost like, what do you call that? Like a test run to see what might happen when that thing really starts to unravel. So that's my own personal view. We're getting into my beliefs and opinions here. I wouldn't call them completely uninformed, but they are my beliefs and opinions. And I think that we've got more unwinding to do. And the reason I'm bringing this up is because gold went down during that yen carry trade unwinding. If you look at what happened to gold on the 4th and the 5th of August, it didn't go up. It wasn't a big flight to safety trade, right? All correlations go to 1 in those times. And gold was getting sold with everything else because it was a liquidity event. So yes, just because there's a crisis doesn't mean gold's going to go to the moon. We've seen it many times not work out that way. Also, gold looks to be completing a 5th wave. I'm not a big Elliott wave guy. I'm learning more about it, but we'll see. Hope always leery when CNBC is touting the GEX as they are right now. Me too. Bruno, good to see you. Weekly cycle on GLD. down through 125. I'm not sure what that means, but I'll take your word for it. Cycle similar for silver. We can look at silver. Got some confirmation there. Nice time to buy, perhaps in September. I think so. You know, I'd be looking for a short opportunity right now with a buy opportunity, maybe mid-September. We'll see. Okay. Oil, Bitcoin, Apple. All right. Let's take a look at some other markets. These are some charts I just put together that interested me. Then I'll get into some of your requests. But this is interesting. This is the S&P 500. Okay. Daily data going back to January. It's about 1,150 bars. And pretty nice confluence of cycles. We got this 79 here. That's the 80-day cycle I was talking about that I see in a lot of assets. The 110 here. I'm going to actually get rid of a few of these. So in particular, this is the 80-day cycle in stocks. This is the S&P 500. And as much as I hate to say it, we're coming to a bottom of this cycle. And we just got a pretty darn strong move up into the cyclic RSI bands. So, you know, definitely got some momentum divergence here, but still, this is nothing to ignore, okay, on the daily data in equities. This is my latest picture of the 2-hour data on the E-mini S&P 500. Okay, this is the rally that we've been in since the head fake yen carry trade. Nothing to see here, everybody. Move right along. And we've still got momentum trending up here. Okay, so, and even, you know, I think this is something to pay attention to when the top band is trending up too. So I'm like, this is not back up the truck short on equities, but this is like equities getting toppy here. And, you know, here we are, the top of the cycle. This is some the 263 here and the 117. That 117 is the same as Bitcoin, right? We just look at that one, the weekly cycle, you know, a little overextended here, and could have a quick correction that I don't think is going to be a crash, but could be a good shorting opportunity. I'm more interested in shorting equities this week than I am in being long equities. All right. One of my favorite trades still right now is long bonds. I've been saying it for a month now. Let me go back and look at my table here. Okay, hopefully, well, let me just briefly say for those who are new, right? This first half of the table here is trend data, 20-minute trends, 2-hour trends, daily trends, okay, total trend. And here are bonds, okay, ZT, that's 2s, 5s, 10s, and 30s. And we can see the trends overall are still quite solid on bonds. And the cycles over here is what this is from. So these are 20-minute, 2-hour, daily, and weekly cycles. And the cycles on bonds are pretty bullish still. And the 5 years here, which is kind of, I think, the sweet spot in bonds right now to be long bonds are still bullish. And now if we go back and look at, where were we here? Okay, so this is the 5-year bonds, Treasury bonds, 2-hour data. And I've got some nice cycles. I love it when I get this 1, 2, 3 structure. Okay, it's not a perfect 1, 2, 3 harmonic, but 85 to 170, that's a perfect 1, 2 harmonic to 235. Okay, so I threw that one in there too. And look, you know, all those cycles are kind of bottoming, not all together, but pretty close. And whew, look at me using the tools. A cyclic RSI buy signal here on the 85-day cyclic RSI. So I like that trade. I want to briefly talk about the yen because I do think we need to be paying attention to the yen. This is the weekly data. This is what I showed a couple weeks ago. Okay. This is inverted from the charts we were looking at before. Sorry. But this is US dollar on top, yen at the bottom on weekly data. So when this is going down, okay, it means that the yen is getting stronger relative to the dollar. And this weekly cycle suggests that the yen should continue to get stronger relative to the dollar into this bottom next year. Okay, so that would mean more carry trade unwinding as this comes down. Right now, the dollar is getting weak, right? But the yen is about steady, you know, and overall, we could definitely see more dollar weakness and yen strength into next year, early next year. So look forward to that. The daily cycles, however, on the yen, we got this nice 86-day cycle again. Okay, right here, sticking out of the spectrum with the green triangle on top. And not quite a cyclic RSI buy signal there, but definitely trending that way. Which would suggest, you know, some yen weakness and dollar strength for a few weeks. And then if we go down and look at the 2-hour data, not a really clear spectrum, but not bad. That would suggest a little more yen strength. Okay, maybe there'll be a retest of these lows in USD JPY. Don't know. But I'd look for a little more yen strength, dollar weakness, and then a reversal out of that. That could kind of trigger this daily cycle of dollar strength and yen weakness. But longer term, I think we still got plenty of trouble ahead. So that's what I see with the yen and the carry trade situation. And just looking at the dollar also. So this is just the dollar futures. Last chart till I get to your requests. Whoops. Just wanted to zoom in here a little bit. So it's the 56 days cycle. No, it's the 82-day cycle here. Okay, again, 80. What's going on with 80 days? Okay, 80 trading days. I guess that's about a quarter, a little less than a quarter. No, there's 250 trading days in a year, so that's about a third of a year, about 4 months. Anyway, dollar's going down, but it's going down, past the bottom of the cycle, and momentum is still down. So careful, but the cycle's turning up. So overall, I think we could see some relief from the yen carry trade concerns, but I think it'll be back to haunt us before the end of the year. And if we look at the shorter term cycles on the dollar, the 2-hour cycles, we got this 115 here again, 116. That's the weekly cycle. In the futures markets, we're due for a turn. All right. So that's what I got. Let's take a look at some of your questions. I think somebody wanted to look at Bitcoin again. We can go back here, update these charts. So Bitcoin, we're moving into the week for Bitcoin. So let's grab the latest data, see where we're at. This isn't super bullish right now, but we're getting to the bottom of the cycle. Maybe sometime today into tomorrow, I wouldn't be surprised to see some up moves in Bitcoin. I do not think that it's off to the races this week or next week. But man, look at how this cycle sticks out on the spectrum here. 115, not using these other ones because it just doesn't get any better than that. Momentum is turning down a bit here, so careful. And the top line of the bands is also trending down on the cyclic RSI. That makes me a little nervous. And the trends in Bitcoin are just very bearish. So we go back and look at Bitcoin trends right here. Okay, remember these are the trends. All from, the 20 minutes through the 2 hours are bearish. The dailies are still bullish. They're holding up. But I think still shorter term, we're not out of the woods yet on Bitcoin. Cycle-wise, we do have the bullishness this week. So maybe, we are in the period where in the past 3 cycles of the halving cycle, we've seen Bitcoin be off to the races around now. I'm bullish longer term. I think 100,000 is a reasonable expectation. I don't know that it will be this year, maybe next year, but for the next week, I'm cautiously bullish. All right, what else did y'all want to talk about? Excuse me while I got you over on the other. Don, you want to look at oil? Yeah, let's look at oil. Good one. So trends on oil. Okay, here's CL. Again, these are futures. So trends right here on oil are pretty bearish, right? But the cycles right now, especially the 20-minute and the 2-hour cycle, are more bullish. So let's take a look at our 2-hour cycles in oil. Woo. 149, 102. Even grab this 211. And I'd say a bottom in oil is imminent. Even got a little bullishness from the cyclic RSI. So that looks pretty good to me. I am long oil right now. And cautiously, I think you could have a stop down below 72. On the whole, I think some short-term bullishness that could be quite strong. All right. Silver. Sure, let's take a look at silver. Silver has been weaker than gold. Oops. Come on. Okay, where'd you go? Okay. Not sure why I've lost a little control here. Oh, well, let's just refresh. Might take a minute, but we'll refresh that and get back to silver. In the meantime, we could just look at all right, so here's daily data on silver. Again, I like to add a couple hundred bars, get about 1,000. You can see some familiar cycles. You got a pretty nice 100 and 200 here, 97 and 201. Got some bullishness from the momentum, but overall the cycles on the daily look weak to me. And if we drill down into the 2-hour data and silver, got this long-term cycle. It's a little longer than I like to use, especially if we need to get more data if we're going to use that long of a cycle. Okay, so somewhere around 360 gives us, not great. Let me use a little less data here. Look at some shorter term cycles on the 2-hour stuff. So you got this 92. That's worked reasonably well, not great, but that's topping right now. Overall, I'd say, silver obviously is highly correlated to gold. My short-term forecasts on gold are down. I think short-term on silver is probably down too, especially given the weakness we've seen in silver versus gold. Okay, silver's not at new all-time highs. All right. Let's wrap it up here. I like the opinions. You're dreaming if you think we are in deflation. I think this is a good debate to have. We're not going to have it here today. Anything else? Any burning questions? All right. Semiconductors, sure, we'll take a look at that. And then we'll wrap up for the day. All right, so let me jump back here. Semiconductors, what is the ticker? It's probably just SOSX, but let me just make sure. Yep, iShares Semiconductors, okay. That can't be right. That's got to be some bad data. Let me try a different source. Okay, that's probably better. All right, nice clear low to work from here. It's about 1,000, 1,100 bars back. I like working off of highs and lows, okay? I think that's important. So number one cycle is the familiar now, I hope, 80-day cycle. Strong bottom there, brothers and sisters, with a nice strong cyclic RSI buy signal. So that looks pretty darn interesting to me. I also got this 126 and take a look at that. We'll see. I mean, I still think this 80-day cycle leans a little bullish on the stocks. We can see if I can get a 2-hour chart on the stocks here. Well, looky there. Grab that low. It's about 800 bars back. See what that looks like. This 144 is kind of shaping up as a good cycle. Let's take it back a little bit further to this recent previous high. We still see around this 140. I'd go with that. And yeah, maybe some short-term weakness. All righty. Sorry if there we go. All right, so we covered a lot of ground. Hopefully next week we can do more on the portfolio of trades in a way that will be more accessible for you. It might take me 2 weeks, so don't hold me to it. But thanks again for tuning in to Cycles TV. We are the foundation for the study of cycles. We are not for profit. Our YouTube channel is full of high quality free content that I don't think anybody's given away as much high quality free content as we are. And we'd be honored to have you as members, where you can get access to our software and be honored to have donations if you're so inclined. So thanks again for joining us. Careful out there. Best loser wins. All right.